Before you assume your kids will inherit everything you've worked hard for tax-free, let's talk about a silent threat that's catching many Pennsylvania families off guard: the oh-so-lovely Pennsylvania inheritance tax. Most people spend years building wealth to create freedom and economic security for the next generation. But here's the problem: in Pennsylvania, the state gets a cut before your loved ones do, unless you plan ahead strategically. Pennsylvania is one of only 6 states in the country that taxes what your family inherits, and it's not one flat rate. The tax depends on who you're leaving your assets to. The Pennsylvania inheritance tax rate is 0% for spouses and charities or other nonprofit organizations, 4.5% if it goes to your kids and grandkids or upstream to parents and grandparents, 12% if you leave it to a sibling, and a whopping 15% if you leave your assets to a friend, niece, or nephew, or anyone else. Even worse, your family only has 9 months to file the return and pay the tax. That's not exactly what the peaceful transfer of wealth most families envision is. But here's the good news: there are smart strategies that can reduce or even eliminate this tax. And it's not about loopholes, it's about using the existing rules to your advantage. Strategy number 1 is joint ownership. If you co-own assets with a child, those assets may reduce the inheritance tax when you pass. For example, if I add my child as a co-owner to a $1 million account, only half of it may be subject to Pennsylvania inheritance tax. But we have to be careful here because there are time requirements for joint ownership that can create complexity if you have multiple heirs. So this should always be done with professional guidance. Strategy number 2, lifetime gifting. Here is one that most families overlook: gifting while you're still alive with warm hands. In Pennsylvania, you can gift up to $3,000 per year per person, and those gifts are completely exempt from inheritance tax, even if they're made in your final year of life. But it gets better. If you gift more than 1 year before you pass, the entire amount, no matter what the dollar amount, is free from Pennsylvania inheritance tax. For high net worth families, this can be a no-brainer to chip away at a taxable estate over time. But here's the reality: most people aren't doing it, and it adds up, especially when you have multiplied across multiple family members year after year. Gifting strategically isn't just generous, it's also smart tax planning. Strategy number 3, pay early, save big. Here's an easy win. If your heirs pay the inheritance tax within 3 months of your passing, Pennsylvania gives you a 5% discount. So for large estates, that can mean thousands of dollars in savings. Strategy number 4, charitable giving. If you're leaving money to a charity, that portion avoids the Pennsylvania inheritance tax entirely. And if you plan to give, let's use the most tax-inefficient assets like pre-tax IRAs to fund those gifts, because charities do not pay income tax on those dollars like your kids would. If I leave a pre-tax IRA to my kids, they get hit with a Pennsylvania inheritance tax and ordinary income tax on the IRA dollars. If I leave that IRA to charity, it escapes both income tax and Pennsylvania inheritance tax. Lastly, life insurance. This is another secret weapon. Life insurance is 100% exempt from Pennsylvania inheritance tax. It's a powerful tool to pass down wealth tax-free, especially when other assets may be heavily taxed. At Brandywine Oak, we work with families to proactively plan for Pennsylvania's inheritance tax so your loved ones are not left with an unexpected bill after you're gone. Want to learn how we can help protect your legacy? Reach out and see how we can help.